All right, let's start with this scenario. And this one, it honestly feels a bit like a glitch in the matrix.
Okay.
So imagine you run this, massive public company, and you just posted the absolute best year in your entire history. I mean, record revenue, record profits, record users.
Right. By every single traditional metric, that is a CEO's dream scenario. You're winning.
You would think. But Robinhood, they released their Q4 and full year 2025 earnings yesterday, February 10th. And the market's reaction was, well, it wasn't a champagne toast.
Not at all. The stock dropped, what, almost 9% in after-hours trading?
It feels completely irrational. You knock it out of the park, and the crowd boos.
It's a brutal welcome to the big leagues, isn't it?
So that is our mission for this deep dive. We're going to tear apart the earnings call with the CEO, Vlad Tenev, and the new CFO, Shiv Verma. We have to figure out why Wall Street is punishing a record-breaking performance.
And honestly, we need to move past the old meme stock narrative for good. Because this isn't the GameStop app anymore.
Not even close. Looking at these documents, I mean, this is a very aggressive, very calculated attempt to capture the great wealth transfer.
Oh, absolutely. They're not just trying to get you to trade a few stocks. They want to build a financial super app that handles, well, everything. Your paycheck, your retirement, all of it.
And they're throwing some wild new tech at it. Prediction markets, AI, custom blockchains. It's a lot to process.
It is a lot. But we have to start with that drop. Why does a company grow revenue 52% year over year to hit $4.5 billion and still get hammered?
Yeah, let's just lay out the top line numbers first. So Q4 revenue alone was $1.28 billion. And profitability, we're talking real capital P profit. Net income was $605 million.
And that's not some, adjusted EBITDA metric. That's real cash. To give you some scale, their revenue has tripled in just 3 years.
So what's the problem?
Well, here's the thing about Wall Street. It doesn't really care about what you did. It cares about what you will do.
And that's where the miss comes in.
Partly, it's the classic beat and miss game. So they beat earnings expectations. EPS came in at 66 cents versus the 63 cents expected.
Okay, so that's a beat.
But they missed the top line revenue target, just by a hair, but still. Wall Street wanted $1.32 billion, and Robinhood gave them $1.28 billion.
That feels incredibly picky, missing by $40 million when you bring in over $1 billion.
It is picky, but I think it signals that the market is it's pricing Robinhood for absolute perfection. When you have a high valuation, any slip in growth momentum gets punished.
So that was part of it. What was the other shoe to drop?
The real anxiety, I think, came from the CFO, Shiv Verma. He gave guidance for 2026, and he projected expenses to grow by about 18%.
Oh, there it is. Investors hear expenses going up, and they just panic that the profit party is over.
They worry about operating leverage. Basically, they want to see revenue grow way faster than costs. And Robinhood is saying, look, we're investing. They're transitioning from a scrappy startup to a diversified giant, and that costs money.
But wait, hold on. You mentioned diversification. Pause on that stat from the report. 11 different business lines.
Yes. 11 different business lines now generating over $100 million each.
See, that fundamentally challenges the whole bear case, right? The idea that Robinhood is just a crypto casino or totally dependent on, payment for order flow.
It's a completely different story now. And the most exciting part of that news story, the one getting all the headlines, has to be prediction markets.
Right. This is the thing that Vlad Tenev keeps calling a super cycle.
He really believes this is a fundamental shift in how people interact with real-world events through a financial lens.
The numbers are kind of insane. In 2025, they traded over 12 billion contracts.
And get this, just in the first few weeks of 2026, they've already done $4 billion in volume. The velocity is just absurd.
But what are people trading? I saw that NBA contracts actually surpassed the NFL in January.
Which tells you it's not just about the Super Bowl, right? It's becoming a daily habit. But there was another, maybe darker detail in the call.
What was that?
Vlad noted that right after the NFL season ended, volume spiked on contracts related to a government shutdown.
You're kidding. People are literally betting on whether the government will shut down.
Well, think of it less like betting and more like hedging reality.
Hedging reality.
Yeah. If you own a business that relies on government contracts, a shutdown could crush you. So now you can buy a prediction contract that pays out if that shutdown actually happens. You're basically buying insurance against the news.
That is wild. It's turning the nightly news into a tradable asset class.
It's the financialization of everything. But here's the strategic move that most people probably missed. Robinhood isn't just offering these contracts.
They're trying to own the venue. You're talking about Robinhood.
Exactly. The joint venture with Susquehanna, they are building their own exchange layer.
So why does that matter to the average person listening? Why do I care if they own the exchange?
Because of the moat. If you're just an app that lets people buy stocks, you're relying on the NYSE or the NASDAQ, you pay them fees, you follow their rules, you're just a storefront.
A commodity.
Right. But if you build your own exchange, you control the economics, you keep the fees, and you can innovate on the product way faster because you don't have to ask permission from the guys who own the plumbing.
So they're not just running a table in the casino, they're trying to be the house.
Precisely. Vlad wants to own the infrastructure so he can offer things competitors just can't.
Okay, so that's the play for the active trader, the,
Yeah.
The adrenaline junkie. But you can't build a trillion-dollar asset manager just on that. You need the boring money.
You need the wallet share, and this is the super app pivot, moving from trading to actual banking.
And the gold card numbers are just ridiculous. 5x growth in 2025. They have 600,000 people carrying this thing now.
And spending $10 billion a year on it.
The marketing is genius.
I
mean, it's a physical, solid gold card. It's heavy. It's a status symbol. And the 3% cash back is really hard to beat.
It's a loss leader, but it's designed to create stickiness. The gold card is the hook. The anchor is the new banking product.
That just launched, right?
Yeah. Very recently. And they already have $400 million in balances. But there was one statistic in the earnings call that I think is the most important number in the entire report.
Which one?
Over 50% of the funded banking customers have set up direct deposit.
Wait, half of them actually move their paycheck over?
Yes. In the world of fintech, direct deposit is the holy grail. It is so hard to get someone to change where their paycheck goes.
It's a huge hassle.
It's a hassle. People are lazy. The fact that Robinhood convinced half these users to switch, that signals massive trust.
That's the inertia problem. Once your paycheck is flowing in, you're not leaving. It's just too much work to switch everything back.
You are exponentially less likely to churn. You pay your bills from there, you save from there, and this ties right into their retirement push. Their retirement assets doubled to $26.5 billion.
It's a walled garden. You come for the Dogecoin, you stay for the IRA match.
And now they're trying to export that whole model globally. For a long time, this was just a U.S. thing.
Right, but now they have, 750,000 customers outside the U.S., and they just launched ISAs in the U.K.
For our listeners, an ISA is basically the British version of an IRA, a tax-advantaged account.
And they're buying a brokerage in Indonesia.
Yeah.
But the really big international play seems to be linked to that Bitstamp acquisition.
Yes. They bought the crypto exchange Bitstamp last year, and volumes have already doubled since the deal closed. But this isn't just about, number go up on Bitcoin.
This is about tokenization.
It's all about tokenization.
Okay, we need to define this because it's a buzzword that gets thrown around everywhere. What does it actually mean in this context?
So think of a stock share today. It lives in this centralized database at the DTC.
The Depository Trust Company.
Exactly. And the whole system it's slow. Settlement takes a couple of days. The market just, it sleeps at night and on weekends.
Right, so if news breaks at 5 p.m., you're just stuck until the next morning.
You're completely stuck. Robinhood is betting on a future where stocks are represented by tokens on a blockchain. In Europe, they already have 2,000 stock tokens available, which means 247 trading. It means self-custody. You can hold the asset in your own digital wallet, not with a broker.
And they're building their own blockchain for this. The Robinhood chain.
A layer 2 blockchain. Think of it like a dedicated express lane built on top of a main highway like Ethereum. It's faster, it's cheaper. Vlad's vision is that eventually crypto and traditional finance just merge completely.
And he wants to build the rails for that merger.
Again, it goes back to owning the infrastructure. They don't want to use the old rails. They want to build their own, which requires a ton of engineering.
Right, which brings us to the efficiency piece. How are they building all this stuff without hiring thousands and thousands of new engineers?
This was my favorite part of the call, the AI efficiency engine. I mean, every company says they're using AI, but Robinhood actually put a dollar figure on it.
A big one.
A very big one. Vlad stated that AI automation in their software engineering process saved the company 9 figures in 2025.
9 figures, so at least $100 million.
At least, just in engineering. Then you look at customer support. Over 75% of support cases are now resolved entirely by AI.
That is just astounding. staggering shift.
It explains the operating leverage we talked about earlier. They grew revenue by over 50%, but they sure didn't grow their headcount by 50%. They're decoupling their growth from their labor costs.
And now they're rolling this tech out to users with that Cortex tool. Vlad used an analogy I loved. He said Cortex for Legend, their desktop platform, is like Cursor for software engineers.
That's a great comparison, but we should probably unpack it for people who don't write code all day.
Please.
So Cursor is an AI coding tool that doesn't just auto-complete what you're typing. It sort of predicts your intent. It acts like a partner writing whole blocks of code because it understands the context of what you're trying to build.
So apply that same idea to trading.
Exactly. Imagine an AI that doesn't just show you a stock chart. It watches the market for you. It flags trends based on your personal strategy. It helps you execute complex orders. It's like an AI analyst sitting right next to you.
If that actually works, that's a huge competitive advantage. Yeah, if I can get an AI edge at Robinhood but not at Fidelity, I'm probably moving my money.
That's the bet. But the tools are only as good as the assets you can actually buy with them. And Robinhood is teasing some new asset classes that are typically off limits to normal people.
You mean the private markets thing?
Robinhood Ventures. They filed what's called an N2 form with the SEC.
Which is just regulatory speak for we are launching a fund.
A specific kind of fund, a closed-end fund designed to hold private assets. So private equity, private credit, maybe real estate. Historically, you need to be an accredited investor to touch this stuff.
Which means you need a net worth over $1 million or a really high income. It locks out like 90% of the population from owning a piece of SpaceX or Struck before they go public?
Correct. Robinhood wants to package these assets so retail investors can buy in. Some analysts think this could be even bigger than prediction markets in the long run. It solves a fundamental access problem.
It's the democratization theme all over again.
It is. And potentially that now extends to government policy.
Ah, the Trump accounts.
Yeah.
We should tread carefully here, but Vlad did mention he was at a White House summit about this.
He was very diplomatic,
Yeah.
but the business implication is pretty clear. The administration is exploring some new types of investment accounts. The details are still vague.
But Robinhood is positioning itself to be the default partner.
Exactly. Vlad basically said, if the government creates a new savings vehicle for millions of Americans, we want to be the app they use to open it. It's a pure volume play. If that policy goes live, it could mean millions of new funded accounts overnight.
So, when we pull back and look at this entire picture, we've got record profits, a real pivot to banking, these huge prediction markets, massive AI savings, and a move into private equity.
And a stock price that dropped 9%.
So what's the real takeaway for you, the listener? Is the market just wrong, or are we missing something?
I think the market is just impatient. It sees the expense growth for next year and it gets nervous. But if you're watching the industry, the real story isn't the daily stock price, it's the velocity. Robinhood is just moving so much faster than any legacy financial institution.
They're building that walled garden piece by piece.
They are. They want to be the operating system for your money. But I want to leave you with one final thought that really struck me when I was looking at all their infrastructure moves.
The own the exchange idea.
Yeah. Vlad Tenev is explicitly saying that the exchange layer is becoming a commodity. So he's building his own prediction market exchange. He's building his own blockchain for stock tokens.
Okay.
Well, if he succeeds, if Robinhood becomes the place where these assets are issued, traded, and held, do we actually need the New York Stock Exchange or NASDAQ for retail investors anymore?
That's a heavy thought.
Yeah.
If you build the venue and you already have all the customers, the old guard starts to look like a very expensive middleman you don't really need.
It's a pretty existential question for the entire financial system. Something to chew on.
Indeed. Keep learning, keep questioning the infrastructure. We'll see you in the next deep dive.